You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Okay, so the pair that I want to speak about today is CHF JPY, and the reason for which I want to speak about CHF JPY is because now the pair is very near to providing to us another very good trading opportunity. Lately, we have been speaking about CHF JPY a lot. We spoke about all the moves that the market has now been creating, and the market followed exactly what we wanted to see from our last analysis on the pair. So it's time to make an update and see exactly where is the next opportunity for the pair and how we can be looking for the next opportunity on it. And as usual, I will keep the analysis as educational as possible so that you will learn exactly what you have to be looking for in the market when you are scanning for trading opportunities. So let's start the analysis. Now, from the monthly time frame, what do we have? Now, from a monthly perspective, we can first of all see that the market has just tested a quite strong area of previous monthly resistance, which is now turned monthly support here. The market has tested this previous resistance, turned support, and started this rejection to the upside, which is usually exactly what you expect in this kind of situations, because a resistance level, once it is broken to the upside in the market, it is then turned support. And after the market hits a support area, you expect a rejection of the support, specifically a rejection to the upside. And in this case, we had even more confirmation because we also had the creation of this impulse and correction pattern. And after an impulse and a correction, what you expect is the continuation to the upside for the completion of the impulse, correction, and impulse pattern to the upside. So everything was aligning for a nice longing opportunity here on CHF JPY for this move to the upside, and that is in fact exactly what the market has been doing lately, following exactly what the market usually does in this kind of situations. Going down on the weekly, what do we have? Now, on the weekly time frame, we have quite interesting price action as well. In fact, we can see that the market has just created this overextended W formation. Now, after an overextended W formation, what you want to see is the market create a move to the downside. Specifically, you would like to see the market create a retracement, so a move to the downside at least to the 0.382 of the Fibonacci taken on the impulse leg, because in general, if you want to measure a retracement in the market, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do this, we can see that the 0.32 of the Fibonacci taken on this impulse is exactly at this area here, which is that zone at which you expect the market to create a retracement to complete the pattern before the continuation to the upside. So from a weekly perspective, we want to see the market create a move to the downside to go and complete the pattern at this level. Going down on the daily, what do we have? Now, we will now check what we have on the daily time frame, okay? But before we go and see what we have on the daily, I want to first show you what we have from an order flow perspective. So what institutions are currently doing in this market. And for that, we can use the commitment of traders, which is the COT data. So how hedge funds are shifting their positioning in time, specifically non-commercials. Why non-commercials? Because non-commercials are the entities that are in the market just for speculation, okay? They are in the market to make money like ourselves. And obviously, if we are able to read their orders, we do have an advantage over our competition in the market because we can trade alongside the institutions. And at the moment, what we can see. Now on the CHF, we can see that with the last report, hedge funds have opened 78 short positions and closed 257 long positions, bringing the long positions to 5.2K with the longs still very high at 19.8K. So the CHF is still strong, however, is starting to get weaker. And if we go and see what we have on the JPY, we can see that on the JPY, we just had a massive increase in the net positions, with net positions going from the 29.6K that we had here all the way up to 47.5K net positions. So a massive increase of the net positioning here on the JPY, and 7.9K long positions added, with 62.4K longs and 14.9K short positions. So the JPY is getting quite strong, the CHF is starting to get weak. So from an institutional perspective, we can expect a retracement, and that is actually already what we wanted to see from a monthly and weekly perspective. On the monthly, in the long term, we want to see the continuation to the upside, but as we have just said on the weekly, we first expect a retracement because, as we have just said, on the weekly time frame, we do have this overextended W formation from which we need a retracement. So what we can expect is definitely a retracement now that we know that also from an institutional perspective, we do have some shorting of the CHF and longing of the JPY. So how we can be approaching this kind of situation with students for a trading opportunity? Now, we had spoken about CHF JPY quite a few times in the past. I spoke about CHF JPY when the market was here. I made a full breakdown explaining all the reasons for which from here we wanted to see this move to the upside, and that is exactly what the market did. Then I made another breakdown of CHF JPY after this W formation, explaining all the reasons for which from here we wanted to see this move to the downside, and again, that is exactly what the market did. Then we had the creation of this overextended M formation, and I spoke about CHF JPY when the market was here, explaining all the reasons for which from here we wanted to see this move to the upside, and again, that is exactly what the market did. Then we had the creation of this W formation, and I made a full breakdown explaining all the reasons for which from here we wanted to see this move to the downside, and again, that is exactly what the market did. Then we had the creation of this M pattern, and when the market was here, I made a full breakdown explaining all the reasons for which from here we wanted to see first this move to the upside, and after this move to the upside, a retracement before the continuation higher, and the retracement we wanted to have it at least to the 0.32 of the Fibonacci taken on the impulse, which is exactly what the market did before creating a move to the upside exactly as we wanted to see. And by the way, I will link all this previous analysis in description. So you find everything linked in description, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. But at the moment, what do we have and how we can be looking to capitalize on the next move for CHF JPY? Now, at the moment, what we have is a market that has created this candle here. Now, in all this impulse to the upside, there is one candle which is not related to the move to the upside, which is exactly this red candle. So this red candle is a strong area of previous resistance, which is now turned support here. And until the market will remain above this previous resistance, which is now support, we cannot be looking for any kind of shorting opportunity because we will be shorting at a daily support area, which is never a good idea. So until the market will remain above this area, we can definitely expect the market to create more continuation to the upside, as we already wanted to see from the monthly. So we cannot be looking for any kind of shorts yet. However, things could change quite quickly. Why? Because if the market will manage to create a daily break and close, so a daily close below this structure, then as you know, in the market, previous support, once it is broken to the downside, is turned resistance. So if the market will manage to break and close below this structure, then all this support will be turned resistance. And after the break on the retest of this structure, this is exactly where we will be monitoring price action with students. Now, how we will be monitoring price action with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entry, the best time frame is the 4 hours. So until the market will continue to the upside, we're not interested at the moment. But if the market will manage to break below the structure, after the break and close below the zone, on the retest, we will be monitoring price action from a 4-hour perspective, which is the best time frame for confirmations and entries, and we will be waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the market to create the move to the downside, to complete this daily impulse correction and impulse pattern to the downside, and the completion of the weekly overextended W formation, as we have already identified from a weekly perspective. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. Is a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.